And global markets are once again touching new highs. US markets are at record high already. There are multiple risks there as well, which are being faced by economies as well. What is the outlook for global economies and what is the way ahead? To talk all that and much more, today we are joined by Margaret Yang Yen. She's DailyFX Strategist from Asian Financial Hub, Singapore. Good morning to you. First of all, what is the outlook for overall global market and what are overall Asian markets? How are they going to be?
Asia-Pacific market seems to be catching up with a rally. This is based on earnings optimism as well as a continued recovery in the global economy. So we are expecting the U.S. corporates to deliver stellar earnings in the second quarter with an year-on-year EPS growth estimated to be hit 64%. So this will mark the highest level seen in more than a decade. However, in Asia-Pacific, markets like Greater China, Hong Kong, and Singapore are slightly lagging behind because of the sporadic COVID-19 outbreaks in the region, especially the Delta variant that is threatening the growth momentum of Asia-Pacific economies. So we will have Chinese GDP data releasing on this Thursday, which is expected to slow down to 8% from 18.3% in the previous quarter. And also Chinese trade balance data is due later on. We saw that Chinese Central Bank PBOC cut the reserve requirement ratios for all banks by 50 pips last Friday, which shows that enterprises are needing liquidity to survive.
But are these markets likely to maintain these levels because there are many risks associated? Overall, many other factors are going to be there as well. So are these likely to maintain these high levels? Well, Indian markets today, they have opened in red and they are under pressure.
I think markets like China, Hong Kong, Singapore, and some Southeast Asian countries are likely to range bound until a further catalyst is released. We will monitor closely how the earnings season goes in the region.
And one issue that is clearly there in the global economy is global minimum corporate tax rate. What are the benefits for developing economies?
I think the global minimum tax rate of 15% will benefit more of the rich countries where those MNCs are based in, whereas the developing countries may not benefit so much. This is because most of the additional tax revenues under this new regime will go to the MNC's home country instead of places where they are generated from. So this may not be a fair deal for developing countries.
And one last question to you, Margaret. How are the rising crude prices a cause of concern, especially when Brent is rising? All other economies, many economies, how are they going to react to it?
Yes, rising crude oil prices is definitely posing inflation risks to countries all around the world, especially to those major oil importing countries like you mentioned, India, Japan, and China. So all these are major manufacturing export countries that are highly reliant on oil imports. So rising energy prices is already feeding into inflation pressures that is bad for manufacturers and bad for consumers. So this may impose a negative impact to the economic recovery.
Well, thank you, Margaret, for joining us this morning. Clearly, Indian markets are also at record high only. Some days they go down, sometimes they go up as well. WION now available in your country. Download the app and get all the news on the move.